Welcome everyone to our COVID EIDL changes webinar. We're going to wait a few minutes for more folks to continue to join the queue, and we'll start up in just a few minutes. Great, we have some folks introducing themselves in the chat. That's awesome. Why don't folks continue doing that? Add in your name and business and where you're based. That'd be awesome. And we'll get going in just 2 minutes. We've still got folks joining the queue, so we'll wait 1 more minute and then we will start. Alrighty, well, thanks everyone for joining Main Street Alliance and Small Business Administration today for this important webinar on the COVID-19 EIDL program, or the Economic Injury Disaster Loan Program. My name is Cynthia Ward-Wickstrom. I'm the Program Director of Main Street Alliance. We've had a great turnout for the call today, both from many Main Street Alliance members whose names I recognize in the chat, and also from a number of new folks who are joining us today for the first time. So for those who are new, Main Street Alliance is a national network of small business owners, over 30,000 small business owners dedicated to ensuring that small business owners themselves can speak directly to policy leaders about your most pressing policy concerns. As you all know, the COVID EIDL loans program has provided essential relief to millions of small business owners to weather this pandemic. But as the pandemic has stretched on, small business owners in our network and nationally have had new and bigger needs emerge. So you all have shared those concerns with us, with your members of Congress, with the administration. So we are very excited today to hear about new changes to the COVID EIDL program that meet some of the needs that you all have been raising up. And that will likely make the EIDL COVID program an even more useful option for small business owners that you can take advantage of this year. So we are thrilled to be joined by Julie Veretti, the Associate Administrator for the Office of Field Operations for the Small Business Administration. Julie has held numerous positions with the SBA and is also a small business owner herself. She is the founder and for the last 7 years, Chief Brand Officer and owner operator of the Denzian's Brewing Company in Silver Springs and Riverdale Park, Maryland. She brings firsthand knowledge and a great passion to this position. So we're very excited to have her. We are also joined today by Anna Maria Lucas, who serves as the Senior Advisor for the Office of Field Operations and knows the ins and outs of all the programs. Julie and Anna will outline the recent updates to the COVID EIDL program and will answer any questions that you may have. Please feel free to add those as you go, as we're going along to the Q&A function. And if you're new to Main Street Alliance, we're going to add a link into the chat where you can get more involved in the work that we're doing, because we would love to have you become involved. So without further ado, I want to thank Julie and Anna for joining us and turn it over to Julie. And thanks again for your continued partnership with Main Street Alliance.
Unmute and get my video going. Thank you so much, Cynthia. I appreciate it. Anna's going to help me sort of move the slides along. It's not a lot, it's only about 5 of them. But as I'm speaking, you should feel free to, any questions you have, just throw them in the chat and Anna will try to answer them as she can. And then once I'm done talking at you guys, we'll just start trying to answer some of the questions that come in. There may be questions that you ask that I can't give you an answer to because I just don't know the answer, and I'm fine saying I don't know. So I would rather tell you that than make something up. And so just know that, but we will try to answer as many questions as we possibly can. And so just so everyone else knows here that we're doing sort of a sneak preview with you guys. So we have a great relationship with Cynthia and the whole team at Main Street Alliance. And so we wanted to offer this sort of sneak peek preview of these changes that are coming down the pike to you guys and the members. None of this is completely signed in ink like it's starting today, but it is happening in the next few weeks or so, hopefully sooner than later. But just wanted to give you guys a heads up because I do, like Cynthia said, think that these changes that are happening are going to make the COVID EIDL program a much more palatable disaster recovery product for small businesses such as yourselves, especially folks that have businesses that are on main streets. It's capital intensive when you work in retail. And so this should hopefully help you get through to the other side of COVID. So with that, let's go to the first page. Let's get into the nitty gritty of this. All right, so what is COVID EIDL? Just really quickly, there's the Economic Injury Disaster Loan Program that's been around for decades, and then there's the COVID version of that. So just quickly, the sort of traditional, so to speak, EIDL program has been around for a few decades. It's been under the purview of the SBA. We have an entire Office of Disaster Assistance, and that program is focused on natural disasters. So physical destruction, say a hurricane or a tornado rips through a town, or a flood, or fires, which we are obviously experiencing on the West Coast a lot right now for the last few years. But the SBA steps in behind insurance companies that replace property, and then FEMA comes in with grants, and then the SBA comes in at the end to do low interest, long amortization period loans. It goes to not only small businesses, but also homeowners can apply for SBA disaster loans, which is a well-known fact about the EIDL program. And again, that's for physical disasters. Now, obviously, COVID hit, and this is a very different type of disaster than a natural disaster. So it's not geographically located. It hit the entire country all at once, and it's economic in nature. This is not like you're trying to replace, your building got crushed by a hurricane. This is your revenue got taken away because of shutdowns. And so this is a very different animal, and we needed to create a new program for that. So one of the things that we did last year is, on balance, the SBA made the decision that it was more important to get the money out quickly than to do as much as they would normally do in terms of bells and whistles and hoops for folks to jump through that would protect against fraud, waste, and abuse. So if there are those of you who are listening in that you applied last year in 2020 and say you got capped at that $150,000 cap to access the program, you probably found that it was pretty simple. So you submitted your information onto the website form, and then within 3 or 4 days, you had the money in your bank. And that was done by design because the SBA understood we needed to get the money out to people quickly. Because unlike a normal natural disaster where the private sector steps in and you have the whole insurance industry that infuses cash usually within 72 hours of a disaster, that didn't exist during COVID. So the government had to do all of the things in terms of getting cash infused into the economy quickly. So that's why those decisions were made. Fast forward a year from now, we're now in 2021. Obviously, COVID has not gone away. But, as a federal agency and using taxpayer dollars, we've had to put in a few more steps for applicants to access more funds through the EIDL program. Not to say that it makes it impossible. It's not impossible. It's just, you just have to fill out a little bit more paperwork, and we have to do a few more checks. Like, for example, working with the IRS and pulling prior tax returns to make sure that businesses are who they say they are, which is, it's understandable. We do need to protect our taxpayer dollars. But I wanted to give you that context and background because I know, and I want to acknowledge up front that there have been issues, to put it mildly, in terms of the customer experience for folks applying for an increase in their EIDL loan amount in 2021. We understand and we know that there have been problems, and we are eagle-eyed focused on fixing those issues from a process standpoint. So we have plussed up customer service agents. We have plussed up the amount of people internal to the SBA that have access to the portal systems from the internal viewpoint, so that we can help move people through the application process faster. So those are just some examples of the things we've done. We're trying to fix processes and eliminate steps that aren't necessary while keeping the steps that are, to make sure that we are balancing getting funds into the hands of small businesses like you, with also protecting against fraud, waste, and abuse. So with that, a few more other points on COVID EIDL. There's dedicated funding for this program. So you should know that there's money set aside specifically for the EIDL program. It lasts until December 31st of 2021. So we at the SBA have to get all of the money out by then. And right now we're sitting on about 170 to $200 billion in lending authority through the COVID EIDL program. Which is nothing to sneeze at. So there's definitely funds available for folks. And I did also just want to make clear, you should apply for this program if you need help, because it's literally the only program that exists right now in terms of getting cash to small businesses that are struggling. I personally wish there were more programs. That's my viewpoint. But this is what we have. And so if you are a small business that's struggling, if you know a small business that's struggling right now and still needs to get cash, I know that loans are not always ideal. Nobody wants to take on more debt. Everybody has a lot of debt. I think when we get to the next pages, you'll see a few of the changes that we're doing to the program that will make that a little less burdensome, but you should apply for it because it's the only program left right now. There are some tax credit programs that are the IRS is doing, so you should look at those as well if you're an employer. But in terms of small businesses, this is really the only full cash infusion program that's available right now. And I also want to make clear this program is intended for businesses that were in operation prior to the disaster. And so I say in operation as of 2019. It's slightly more nuanced than that. Essentially, you have to have been either operating or had taken steps to get to operating before January 31st of 2020. Now, we can argue back and forth about, is that actually the day when the disaster started? I think there's reasonable arguments on multiple sides about that. But that is the date that Congress picked when they wrote this law. So that is the date, according to the statute, that's when the disaster happened. So January 31st of 2020, you have to have either opened your doors or had taken steps to open your doors in order to qualify for this. Because this is not working capital in the traditional sense. It's not like you're walking into a bank and getting funds for your business to expand or buy that new piece of equipment. This is helping you recover from a financial disaster. And so you have to have been in operation when the financial disaster hit in order for you to qualify for this program. All right, we can move to the next slide. All right, so let's get into some of the details of the program. The interest and the term. So the interest is 3.75% fixed if you're a for-profit. If you're a nonprofit, it's 2.75% fixed. And the term is for 30 years. So that's as cheap as you can get in terms of cash and working capital outside of getting a grant. Right now in traditional commercial lending, which is usually tied to prime, it's a floating rate. Most businesses are paying around 5.5% in interest that will go up at some point. And they usually have terms of anywhere from 5 years to 15 years. Being able to take 30 years to pay something down and having a fixed rate where once you know what your monthly payments are going to be, that is just what your monthly payments are, and you can plan accordingly. I know one of the worst parts of operating a business during COVID has been the uncertainty, and it's the constant uncertainty. You plan for one thing, and then 2 weeks later, you have to pivot to something else. And then 3 weeks later, you pivot back to something. And we can all see this now going into the fall with the Delta variety of what's going on, where, you know, things have started restricting again. I know, especially in the retail space, you know, people thought folks were going to start going back to work. They thought folks were going to start going back out to eat on a regular basis. And yes, that has happened at some level, but you can already see some signs of that, of folks going backwards because of this new variety. So that being said, this is certain. So you get this loan, you know what your monthly payments are going to be, and you've got 30 years to pay it back. And the other great thing about that term is that if you decide you want to pay it back before 30 years, you can absolutely do that, and there's no penalty for you to do so. So that's another great way to have this flexibility. It just means that on a monthly basis, you don't have quite as high of a cash requirement in order to meet your bottom line. All right, next, the deferment period is going to be 24 months as of the original loan closing date. What does that mean? That means that if you took out $150,000 in 2020, say you closed in June of 2020, you wouldn't have to start making a payment until June of 2022. So even if you get an increase in 21, so say you apply next week, you get funded at some point in September, you would still have to start making payments starting in 2022. It's not 24 months against that modification where you ask for the increase. So I just wanted to be clear on that, but it's still not having to make payments until 2022 is still also a relief. How can you use the funds? You can use it for working capital, payroll, rent, maintenance, your cost of goods sold, you need to get your supplies. Basically anything that's a normal and ordinary course of business purchase that you would make, you can use the funds for. Now, two of the specific changes that we're making on that use of funds as well is allowing you, if you had prior commercial debt, or whether it's credit cards, it's a mortgage, it is, a lease on something, you will be able to use EIDL funds to prepay or pay down that prior debt. And then you obviously still owe the EIDL money, that will be a loan, but at least you're being able to swap out prior debt using these funds. If you have a loan that is part of the federal government, whether it's SBA, it's USDA, there are different programs that exist in other federal agencies. You can use the funds. Again, this is a change. This was not allowed. It was specifically not allowed to be used this way. But you'll be able to pay down principal and interest using the EIDL funds on a monthly basis. So that's a huge change. Second, the cap is going to go from, right now it's at $500,000. The cap is going to go to $2 million. So that's also huge, because we're going from, which is the next part, talking about how do you figure out how much money you qualify for. In 2020, it was capped at 150. And part of that was because, again, the folks that were running the program at the time, and I don't fault them for this decision, that you only know what you know when you're in that moment. And I don't want to, Monday morning quarterback here. But they chose to cap it at 150 because at the time they saw all of the funds run out for PPP. And they were afraid that if PPP ran out and COVID EIDL money ran out, then there'd be nothing left for anybody. And so the decision was made to cap it at 150. Starting in 2021 in April, we moved that cap up to 500,000. And now we've decided to move it to 2 million coming soon. And the reason why is that we're changing the calculation. It was 6 months of injury in 2020. So we tried to figure out, what is your gross margin as a business for 6 months? And that was, again, a decision made at a time when no one knew how long COVID was going to last. And they were just trying to quickly make decisions. We now, again, a year and a half later, understand that COVID is obviously going to be here. It's been here for longer than 6 months. So what is a more reasonable calculation? So looking at what is a business's 24 months of gross margin. So how do you figure that out? You look at what was your 2019 gross revenue, and then you back out your 2019 cost of goods sold. And then whatever the answer to that is, you multiply it by 2. And that will come up with the maximum loan amount. So It will be up to 2 million once it goes to that cap. As of today, August 18th, it's 500,000. But again, that should go to 2 million in short order. So that's how you figure that out. And if you weren't open in 2019, say you're one of those folks that opened your doors in January 30th of 2020, you would use your 2020 revenue and cost of goods sold numbers. Now, it's important to note that not every business has cost of goods sold. Some businesses do, some don't. It's just if you have a physical, tangible product that you make, you would have cost of goods sold if you sell that. But if you are in the service industry, you most likely do not have cost of goods sold. So I point that out proactively because we get that question a lot. Well, what is cost of goods sold? What if I don't have that? That just means your formula is whatever your gross revenue was minus the number 0 because you don't have cost of goods sold. And then that times 2 would be your maximum amount. All right, so credit score. It's a minimum of 570 as of right now for the 500,000. You can overcome that if you show certain cash flow. They do a cash flow analysis to figure out whether you can still pay it back. Once it goes up to 2 million, that minimum credit score is bumped up to 625. And I realize we should probably add that onto here. So that was decided yesterday. So I don't want to change the thing. I apologize. I didn't have that written there. In terms of other eligibility, you basically just have to have fewer than 500 employees. So it's pretty flexible and expansive in terms of who can qualify for this. So the reason it's in green, again, these are some of the changes, is the affiliation requirements. We're going to be mirroring what we did with PPP and the Restaurant Revitalization Fund. That basically means that if you have common ownership over a few businesses, so you and your partners own, say, 3 or 4 locations, you have different EINs for each of those locations, you'll be able to get up to $10 million across common ownership because of these new affiliation rules. Again, this is after it goes to the 2 million. Right now, it's capped at 500,000, and that affiliation is up to 2 million across companies. So that's just another thing coming up. Personal guarantee. Any loan that's for $200,000 or more is going to have to be personally guaranteed by 2 different groups of people in the company. One is any owner that has 20% or more ownership in the company. And that's regardless of, are you a day-to-day owner operator or are you a silent investor? If you own 20% or more, you're gonna have to personally guarantee the loan. The other group that will have to do that are all owners that are either general partners or managing members. So that means you could own 1% of the company, but if you are a managing member, say you're an LLC, you will also have to personally guarantee this loan. And for those of you who've had prior commercial debt, you've personally guaranteed commercial debt before. This is not new. This is not odd. This is very normal course of business. Commercial debt requires personal guarantees. Down at the bottom, though, where we're talking about collateral. The rules are that if you have a loan that is $25,000 or more, or I guess more than $25,000, you will be required to put up collateral. A couple of things I wanted to point out about that. One is it's never going to be personal collateral. So unlike, which is also a huge help for this program, is unlike regular commercial loans, where if you are an owner and you're putting your name down on the line to A, personally guarantee it, and B, be the borrower as the owner of the business, you would be required to put your personal home up as collateral on that commercial loan. The EIDL program does not require any personal collateral. So I just want to be clear on that. That's a huge help, especially in this time of uncertainty where it's like, you just don't want to risk one more thing, right? So that's, I wanted to make sure I said that. Secondly, you don't have to make up for any gaps. So say, for example, you qualify for $2 million when it goes to that cap. If your business only owns $500,000 worth of collateral, you would only put up $500,000 worth of collateral. you wouldn't have to find that 1.5 million gap to make up for that amount to fully collateralize the loan. So it's a way, again, this is what I mean when I talk about the balance that the government's trying to reach, where it's get money into the hands of entrepreneurs who need it, but then also protect taxpayer dollars to the extent that we can, and trying to be reasonable within those strictures, if that makes sense. If you are a business that owns real estate, and you are borrowing more than $500,000. So again, this would only count if once this thing goes up to 2 million and say you qualify for that, the business, the real estate that the business owns will be required to be collateral. But again, it's business collateral. So it's not personal collateral, it's what the business owns. All right, if we can go to the next slide, please. All right, so let me just close this thing real quick. What you need to apply. If you've already applied and you just need an increase in the loan, so again, you were capped at 150 in 2020, and you want to go to 500,000 today, or you want to go to 2 million when we get to that, here are the steps you're going to take. The first is you're going to sign into the portal and request an increase. Now, some of you are thinking, what are you talking about, sign into the portal? Believe it or not, last year in 2020, you actually created a username and password in the SBA COVID EIDL portal. I know that at the time last year, small businesses were dealing with a lot of trauma, and that actually leads to memory loss. And I'm not trying to be flippant about this. Like, this is a very real thing, and there are a lot of businesses that don't remember that they did this. So I would say go through your email. See if you can find your username and your password. Your username is going to be that the email address that you use, that will be your username. The password will be whatever you use. So hopefully you remember it. I'm sure there's a way you can reset your password. That'd be crazy if you couldn't. So just look for that. So you're going to sign into the portal, and there should be a button on there that says request an increase. If that button doesn't exist, it's because whatever you said your revenue was last year in 2020, it's below that you wouldn't be able to qualify for an increase. So that button exists if your business qualifies for an increase. And again, it's based off your revenue and your cost of goods sold. So just remember that. So you'll press that button, request an increase, and then it's going to take you to another page where it says, is everything you said last year the same thing that you're saying now? So like same owner, same address, all of that stuff, same business name. And you'll either say no and make changes, or you'll say yes and move on. And then if you move on, it's going to bring you to a page for a 4506T, which is a form that the IRS has. What the 4506T does is it basically tells the IRS that you were giving them permission to share your tax records with a third party. And so this third party, obviously in this situation, is the SBA. So pro tip, you must match your street address must be the exact same street address that you use. And I'm talking street address, city, state, zip code that you used in your 2019 tax filings when you filed with the IRS. It's very, very important that it matches. There have been thousands of records that have been rejected or, quote, not found at the IRS because the address didn't match. This does not mean that small business owners don't know what they're doing. This does not mean that, all these mistakes were made. This means we live in a reality where small businesses generally have multiple addresses they use. You have the one that you use when you created your business with the Secretary of State in your state. You have the one when you signed your lease. Maybe you have one that's a mailing address. I remember in 2020, none of this mattered because we were just get the money out. So whatever address you used, it didn't really matter back in 2020. So you just were putting your address in and you were putting your name in and you got the funds in a few days. Now it does matter. So just make sure when you're filling this out, then when you go to fill out the 4506T, find your 2019 tax filings and just make sure that that address matches letter for letter. Okay. And so I just wanted to make sure that I said that on there. The next thing that will happen once you submit that is that within 24 hours, usually very quickly within like an hour or two at the most. The SBA is going to send you an email asking you how much you want for your loan increase amount. It should look like a slider bar. So on one side, it'll say 0. The other side will say, again, if you got this today, it would say 500,000. But after the cap goes up, it'll go up to 2 million. I'm going to give you another pro tip. Slide that bar all the way to the absolute max that you want it to be. What do I mean by that? Say you got capped at 150,000 in 2020. You want to go to the full 2 million as your total loan that you get. Slide that bar all the way to 2 million. If you stop at 1,850,000, which is actually the amount you will get if you get it added to the 150, you will short yourself by $150,000 and you'll only end up getting 1.7 million as the additional. Okay. So I just want to be very clear, slide it to the farthest amount where you want to go with those funds. So those are my pro tips. Make sure the address match and slide the bar all the way to the right, as far as you want to go. All right. Now, if you are a brand new applicant, you're going to go to the SBA's COVID EIDL page, which you can find pretty easily by just Googling SBA COVID EIDL, and you will find it. It should be the first thing that you click on. Once you do that, you're going to scroll down. And by the way, there's a lot of really good information and resources on that page. I highly recommend you look at it. There's an FAQ that we're constantly updating, and we're updating it based off questions we receive in conversations like this to make sure we're answering the questions that are actually being asked. But you go on there and there's going to be a big button on there that says apply here. Click on that and it'll take you to a portal. It's an intake portal. So in that portal, you're going to do your business info. So like, what's the legal name of the business? What's your DBA if you have one? What's your EIN? Or if you're a sole prop, it'll be, what's your SSN, right? Like all those different questions. What's your address? What are the owner's information? You'll put your bank info. You should know what your NAICS code is. If you don't know it off the top of your head, there will be a way to look that up in that intake form. So but your NAICS form is basically what type of industry are you in, right? So just know that you're going to be asked those questions. The intake form shouldn't take you too long if you know your business pretty well. So like these are answers to questions that you should be very familiar with if this is your business that you operate. Once you do that, that's the start of the process, and then you'll end up having to submit a few more documents, but a loan officer will be able to reach out to you after that. But that's basically it if you're a brand new applicant. I do also want to say that if you have had an EIDL loan before and you're applying for an increase, make sure you do that by signing onto the portal and doing it in the same account you created last year. Another big thing that has been causing rejections and issues is people going on to the SBA's website and clicking the apply here and creating a whole new application. Because what happens internally is the SBA's system thinks that you've created a duplicate application for the same business, and it raises a flag internally. And none of this is not overcome. Like we can overcome this, but as I can imagine, you don't want to deal with that. We don't want to deal with that. You know, if you are a small business that is struggling and you need these funds, we want you to be able to have a smooth experience. And we don't want to have to do extra work. We don't want you to have to do extra work. So just please make sure you do not do a brand new application if you're asking for an increase. That is only for people who have never applied for the COVID EIDL program. All right, next page, please. And here on the page, we'll just leave this up, I guess, for the rest of the conversation. These are just extra ways that you can get help. You can go to call the 1-800 number. You can go to our website, sign up for our weekly newsletter. We're pretty active on social media, particularly on Twitter. So if you want to know sort of latest news, and I would watch that space if you're trying to find out when are they moving it to $2 million, when are those changes going to affect, we'll be announcing it there. And then we also have 68 district offices across the country. And so the folks that work in those district offices, their sole job is to help folks like you navigate the SBA and get through our resources and products. So please reach out. You can put your zip code under the local assistance section and be able to find your local district office, and a human being will be able to help you. So with that, let's try to start answering some of the questions that I didn't already answer.
Need to get off mute. Thank you, Julie. First, folks are really appreciative of all the information that you share, particularly the pro tips. So you've been getting accolades in the in the chat there. So thanks for that. So one question from Kunal is, will the portal be updated this week for raising the caps?
That was the hope. I'm not sure it's going to happen this week. We were pretty confident it was going to happen this week. I would say it's more likely to be next week or the week after if it's going to happen. But fingers crossed. And I'm not trying to be like weird about the answer. It's just when you're going through interagency comments and rules changes and stuff like that, sometimes you just get, bumps in the road that pop up that you thought you'd overcome already. But we're working really hard to get it done as quickly as possible because we are very understanding of the fact that this is needed, and it was, quite frankly, probably needed last year. So we're trying to get to it as fast as possible. And I'm sorry may not be the answer anyone wants to hear, but that's the truth. So.
Then we had a couple questions about the details. So although payments are deferred for 24 months, interest is accruing still. Is that correct?
Yes, interest will be accruing. And you can make payments during that deferment period if you want. It's just, again, trying to set up a scenario where if you can't, because of the financial situation our economy is in, you don't have to. But if you wanted to, you absolutely could with no prepayment penalty whatsoever.
Great. Another question is, as a startup in 2018 and 19, we were operating at a loss, suffering greater losses in the COVID period, does this mean we don't qualify for any loan amount whatsoever?
Well, it depends on how you're defining loss. So the way the SBA is defining it is we only care about what was your gross revenue and what were your cost of goods sold. If your cost of goods sold, if that number is higher than your gross revenue, that's where there's an issue and we won't be able to give you a loan. If you have a loss for tax purposes, which especially in a startup year, there are tons of tax incentives that exist on the federal and local and state level because the government understands they should be incentivizing people to start businesses, right? So you can show a loss, but that doesn't necessarily mean that your cost of goods sold are higher than your gross revenue, right? So that's really what we care about. So I don't know if that totally answers your question, but that's how the SBA calculates it.
Great, thank you.
Yep.
So from Deb Field, I want to check that I am understanding one of the changes. I can use the EIDL loan to pay off another loan. Is there any criteria or exclusions?
Can you repeat it to me? Sorry, I'm somewhat of a visual processor, so
so she's checking to understand, to confirm that she can use the EIDL loan to pay off another loan. Is there any other criteria or exclusions for that use?
It has to be a commercial loan. This cannot be like a personal loan. It has to be commercial. It has to be the commercial loan that is owned by the business in which you're applying for the EIDL loan. And again, this is for once these changes hit, right? So, and it has to be commercial. If it is a federally backed or owned loan, then you are allowed to do monthly payments, your debt service payments using the EIDL funds against it. But you can't prepay or fully pay down a federally backed loan. Does that make sense? The difference there? Right.
So it's just the monthly payments that you're...
If it's a federally backed loan or federally owned loan, yes, it's monthly principal and interest payments. But I do want to say, like, that would, as of right now, before these changes happen, that is literally proactively stated in the rules as saying you cannot do that. So we're getting rid of that. That people can actually use it because they're trying to understand and meet people where they are, that like you have debt already. Why would you, in what world would it make sense for you to take on more debt when you can't use those funds to pay down prior debt or pay towards against prior debt? Like that doesn't make any sense. So again, trying to, like, Administrator Guzman has made it crystal clear in her direction to folks like me that work at the SBA that we are to meet business owners where they are in every way that we can. And this is one example where we're trying to do that.
Fabulous. Thank you.
Yep.
Another question from Macy. I applied in early 2020 and received a small loan that I paid off by the end of the year. Am I new to apply or do I go off my previous application?
Oh, wow. That's a great question. If it's closed out, my gut is that you would apply for a new one. But before you do that, could you please, I don't know, Cynthia, if you guys have a way of getting in touch. If we could get an email, you can send it to Anna and we can track down an answer for you, because I don't want to give you bad advice on that.
Okay, great.
Yep.
Sarah, maybe you could track that and we will follow that down. Let's see. Then there was a bunch of questions about nonprofits. So both in terms of what the personal guarantee would be and what the qualifying formula would be for nonprofits.
Yeah, if you could send me the specific questions on those, Cynthia, we'll get back to you on that.
Okay.
I don't know it off the top of my head and I don't have the notes in front of me. And again, I'd rather say I don't know and get you a correct answer than start making stuff up. So.
Great.
Yep.
Let's see. So there's a couple sort of problem solving ones. So I am a service company. On the original loan application, I listed my business expenses as cost of goods sold, even though I didn't sell any products. So I made a mistake on the original loan application.
Yep.
How can I fix this?
There's a couple of things. First, I just want to acknowledge that you and thousands and thousands and thousands of other businesses made the same mistake. So I hope you don't feel bad about that. We are aware that this mistake has happened. What you can do is send an email with your application number to an email address, which Anna, if you could put this in the chat, that would be great. It's P as in Peter, D as in dog, C as in Charlie, .reconsideration@sba.gov. pdc.reconsideration@sba.gov. They should be able to, again, do a reconsideration on your loan to figure out what those mistakes are. And that will trigger a process where a loan officer will reach out to you so that we can try to, fix and get you the funds that you actually qualify for.
Great. And we had a couple other questions that came in around similar administrative questions. So let me know if these are the same solution or not. This was someone, this is from Guadalupe. It has been over 3 months since we submitted for an increase and we have not heard anything back. Should we assume that we do not qualify for an increase?
Nope, you shouldn't assume that. Because again, there was a huge backlog. There's about 600,000 applications that I think we're basically done with the backlog at this point. And so if you haven't heard from us, I don't know if it's because the IRS, because again, that 4506T, we are relying on the IRS to get back to us. So we put out the request and they're supposed to get back to us in a timely fashion. They have sped up their response by a lot, but nobody's perfect. I would say if you can send an email, whoever asked that question, again, with your application number, you want to send it to the folks at Main Street and they can forward it to us and we can try to figure something out internally to get back to you. Happy to do that.
Great. And then we have another similar one. I have a client that applied for an increase and he got a letter that simply stated he was denied because of unverifiable information. Oh, you knew it already.
Yep.
Is there a way for him to provide information to the SBA? They can verify things, or is he out of luck?
It's you want to send an email to the PDC reconsideration email address, because that, again, this is something that we acknowledge. Terrible communication to put something like that in a letter. It makes no sense. All it does is upset people. It's not clear at all about what the heck is unverifiable. But there are specific reasons why one would get that letter. They're just internal to us, but they're very easy to overcome. So all you got to do is put your application number, send an email to that pdc.reconsideration@sba.gov email address, and a loan officer should help you. Just in the body of the email, you can attach the decline letter that you got. You can explain, anything you want to put in there. Real human beings are reading those emails. So send an email as if you're sending it to a person, so we can get back to you on stuff. And I'm sorry I am sorry that those letters have gone out, because it was not our not our shining star moment in terms of customer service. So
I am on a tax payment plan. Can I still apply?
the only thing that wouldn't, anyone can apply. That's a matter of like whether you'll get approved or not. It would really be a matter of whether you're on the Treasury do not pay list, which if you're on a repayment plan and you're actively paying something down and you're not in active arrears, I can't imagine why you would be on the do not pay list. But it doesn't hurt for you to apply. And if you get rejected because you are on a do not pay list, there's ways to overcome some of that, and there's ways to get off that do not pay list. So it doesn't hurt to apply. So I would encourage that.
Great. Can we use idle funds to pay IRS debt as a single member LLC, even though it is a Schedule C on a 1040?
Repeat the question.
Can we use idle funds to pay IRS debt as a single member LLC, even though it is a Schedule C on a 1040?
Yeah, because a single member LLC is a pass-through entity, so you're going to do a Schedule C no matter what. So it depends. Is the IRS debt because it's taxes that you owe, or is it IRS debt because it's a loan from the IRS? Anything that is a loan from the federal government, you can do monthly payments against. But taxes, you can use the funds. Taxes are a normal, ordinary course of business type of thing that you paid for. So.
Great. So I'm a service company providing small business consulting. I assisted a lot of business in doing grant and loan applications for free last year. I am a 1099. Do I need to be an employee?
Employee or employer? Is that?
It says employee, but
if you're a 1099, you're also your own business. You might not have like a legal entity you've created, but you're at least a sole proprietor.
So then eligible to apply.
Mm-hmm.
Yes. Okay, great. Can you confirm if Schedule C other income can be added to gross receipts to calculate gross revenue?
No.
Okay. Here's a big one. Is there future potential for these loans to be forgiven similar to the PPP program?
I wish. No, unfortunately, no. It is not. It's not on the table.
Okay. Given we can use idle to pay down off prior SBA loans, I want to make sure I understand the collateral requirements. We had a 7-year SBA loan with collateral that we almost paid off prior to COVID. Mm-hmm. Is that business collateral going to be acceptable for increasing our idle, or is it going to be considered double dipping?
It's not double dipping. It's support. So idle is when we file with the UCC to claim a lien against business-owned property, it's subordinated to all other prior commercial debt. It's not double dipping. We just would take a second lien position as an agency against it. So it's not going to mess with your prior stuff.
Great. Another follow-up question on who to follow up with. Is PDC still the right email address if I was not yet denied and have not applied for additional amounts yet?
No, if you've not been denied and you haven't applied for additional amounts, you want to go into your portal and ask for more amounts. If that's what, I don't know if maybe you have a question about your prior loan from 2020. If that's the case, again, send an email to the Main Street Alliance folks and they will get it to us and we'll try to route it internally.
Great. So this one is about the 7A. We've had a couple questions about 7A. So
Yeah.
Are there any plans to extend the 7A COVID benefits for loans originated by 9/30, the 90% guarantee waive fees, 3-month loan payments up to 9K past the 9/30 date?
That's
If not,
I think the part of the section 1112 payments from the CARES Act. Sorry, hold on one second. I'm very familiar with this provision. There's not the ability to extend that right now. I mean, Congress could change their mind at any moment, but I've not heard of any discussion about extending that. Again, because one of the reasons why we looked at changing the rules and use of proceeds to allow idle funds to be used to make those monthly payments against 7A is because section 1112 is going away. So that's one of the reasons why that was specifically added to the rule changes. So
thank you.
Yep.
I've got a couple more here, and then also just invite Anna, if you've seen any that I've missed, please feel free to jump in, or Sarah. But a couple more. Once we have an adequate qualifying operating expenses, is there any reason we couldn't prepay an older SBA loan then? And should we do anything special regarding the paper trail of that? For example, if our monthly payroll is $50,000 and we owe $250 on an old SBA loan, but we can pay monthly payroll with current revenue, should we wait 5 months and then pay off the old SBA loan?
I mean, that's a business decision, right? And yeah, you want to make sure you're papering all of your expenditures when you use the funds. It is required, and you'll see this in the loan paperwork when you sign it. You got to save everything for 3 years. You know, what did you spend the money on? And this is all on the. There's no currently there is no requirement that you submit any of this to the SBA proactively. We just require that you save it and keep it on the off chance that we do, audit people, which again, we're using taxpayer dollars. So there's an off chance of that.
Thank you. Anna, have you seen any other ones that you want to bring up?
Cynthia, do you want to ask about there's a question, Julie, about timelines for approval from the increase request when it goes up to 2 million?
Like once you apply, when does the money actually, because really at the end of the day, what matters is, can I get money, how much money, and when can I get the money, right? So I definitely get that. I wish I could give them a very solid response and say, I know that if you submit an application, on a Monday, 3 Fridays from now, you're going to get the money in your bank account. I can't answer that directly. I do know that if you apply for $2 million, that is a lot of money. So you are going to have more hoops to jump through than someone who is applying even for $500,000. So my best guess is it would probably take up to a month and a half for that, maybe 2 months at most. But I know that the systems, again, are being built out right now to make this a much smoother process and a much faster process. So I'm telling you a month and a half, 2 months. I'm also the type of person that tries to under promise and over deliver. And so it could be a lot faster than that. As long as you have all your ducks in a row, you're easily able to, show your business paperwork and all of that, and sign things quickly and respond to things quickly. But that's my best guess on the 2 million.
Great. And there's another one that just came in. I sent a repayment check to the Denver office, but my account has not been credited. What is the best way to rectify this problem?
That's frustrating. I'm assuming on the remittance document that you got, there was like an address or a phone number and email in there. I would reach out to the Denver office specifically. That's where the SBA's financial department exists, by the way, just so everybody knows, is in Denver. If there's nothing on there, I would say send an email to the Main Street folks and they'll send it to us and we'll route it internally to try to get you an answer. And someone just asked on the chat, how long is this program available? It's available until December 31st of 2021. So we have until December to get all these funds out the door. Our hope is to rip through them faster than that, making sure that we get the money out as quickly as possible to small businesses that need it. If you were declined and you didn't hear why, you should apply for reconsideration. So again, go to pdc.reconsideration@sba.gov, send an email to that email address with your application number. In terms of paperwork that you're going to need, I don't have a definitive list, but we are actually putting that list together as we speak, and we'll make that list public on the website prior to it going to 2 million. So again, if you go to sba.gov and look for COVID EIDL, along with the frequently asked questions and all of that, we're going to have all that information listed there. So.
Great. And we will continue to go through the rest of the emails. And if there were ones that we missed, try and work to get some answers back to you. And since we're approaching the hour, I just want to say this was incredibly helpful, Julie. Thank you so much. And to Anna,
Happy to
for
do
all
it.
your support and having this move through. And for folks who joined late, again, thank you for joining this webinar with Main Street Alliance. Sarah will put in again, I mean, this is having you raise your voices about what you need is part of what's really essential to making these programs work better for you and for Main Street economy. So please join us and get active. And thank you so much for your partnership. We really appreciate having a person, a small business owner here who knows how it all works and how challenging it is to be part of the discussion with our members. Thanks.
No, absolutely. Thank you, Cynthia. And I do just want to give a plug. You know, Main Street is very active in advocating for everybody. And they've been great to work with. So just know that like your membership with them is worth it. They are fighting for everybody every day. So thank you, Cynthia, again for having us. And it was great talking to everybody.
Thank you so much. Take care, everyone.
All right.
Bye.
Bye, everyone.